Good afternoon. Welcome to the TheoTrade evening video for March 23rd, 2023. I am Blake Young, and today we're asking the questions, is new home sales miss bad for the markets? Let's take a look at the SPX versus the ITB first. To establish the idea of the home builders, this is the home construction companies, the new home builders are fairly correlated to the equity market, the broad equity market being represented by the S&P 500 index, SPX. If we look at the top and the bottom, you're going to note that a lot of the same peaks and valleys line up pretty nicely on the bounces, on the highs, on the lows. And part of the reason why that's the case when we see all these major turning points is because home builders profit from selling to consumers. So if consumers are doing well and buying new homes, well, they're probably also going to be pushing the economy higher. And if new homes are being sold and consumers are buying new homes and expanding, well, that should be a pretty strong bolster of all aspects of the economy, GDP, purchases, even inflation at a reasonable rate. So the question is, when we see the new home sales miss this month, but still pretty good. I mean, we had 650,000 projected new homes sold, but we only sold 640,000. Is that miss an indication that we're going to see negative in the markets? Well, we can go through and we can do a correlation analysis on the SPX versus the ITB, but I want to do an analysis on the ITB or home builders themselves. And by the way, as a little side note, I'm using ITB versus XHB because ITB is almost exclusively home builders, while XHB includes Sherwin-Williams and Lowe's and Home Depot. So it is a little bit more refined as far as dialing it into home builders on the ITB ETF. So if I'm looking at ITB again and we say, well, we really went super flat through here versus creating lower highs and lower lows like we're seeing in the market. Could the home builders be an early indication? It's not just a matter of whether we're going to break out or not and whether we're going to continue the correlation, but could it be an early indication? So to do this, what I want to do is I want to look at not just the home sales, but the technical analysis of the home sales data, the trend of the home sales data now, as well as the revisions lower. So let's go take a look at some of the previous data on home builders. To do this, we're going to pull up the chart that is provided to us through the Census Bureau. So as we're looking at this, we're looking at the annualized number of new single homes that were sold during the previous month. And we can see there's a little pattern going on through here. What I want you to see is not just that the actual numbers are down from last month, but we also revised last month lower. So reality is we're not lower than last month. We are just seeing weakness. We're seeing weakness in the chart. We're seeing weakness in the new home sales. So these little blue dots are the revisions lower, and you can see that we have revised these lowers more times than not. Just looking at the last few months. Last month we revised lower. Yes, we revised the previous month up, but lower, 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 up, lower, lower, up, lower, up, lower. And so as we look at these just over the last year, go back 1 year with me. New home sales have been revised lower 9 out of the 12 months, showing us that there's definitely the reports are coming out, and then as we reevaluate them, get more data in, we're showing that we're overshooting the upside. So not only is this revising the data lower, showing that we really didn't have as good of reports over the last, especially 6 months, but even over the last year. If we take a moment and say, let's look at this like technical analysis, and if I were to take off this revision, I'm going to turn it into a line chart. You can start seeing that we're creating what I would see as a technical lower highs, lower lows. And so we are in what I would consider a downtrend. Now, if we don't get above 700,000 and we break through 500,000 new home sales, we're in a very strong downtrend. We've gone from a peak of 1 million sales, new home sales a month back in 2020, 2021. And if we break through this purely from a technical standpoint, theoretically, that is a 200,000 home difference. We could drop down to about 300,000 homes. And yes, I do believe you can do technical analysis on reports like this, because technical analysis is just a representation of statistical analysis based off projections. So if we're looking at that and say, okay, we've got a downtrend, lower highs, lower lows. And the lower highs, lower lows, we created a full set. Even if we're being generous and saying, look, let's call all this one high, this is a low, this is a high, this is a low. So if we started the downtrend back in 2020, 2021 and confirmed that that downtrend began as we broke through the support level mid-2022, about a year ago, what does that mean, and what can we find historically that would show us something similar? So if I grab this chart and we're just going to slide it backward and look at where the uptrend started. Here's 2010, 2011, huge spike, huge drop, and we created a base. You can see that same kind of base pattern right about 300,000 homes. And we really based out in 2010, 2011, 2012, and then we started creating higher highs, higher lows, higher highs, higher lows, consolidation, higher highs, higher lows, and we continued all the way through in an uptrend from 2010, 2011 basing out, and we created that same uptrend all the way to 2020, 2021's peak. And you can see we could do technical analysis on this chart. Now if we zoom back a little bit further and roll back a little bit further, look what happened back here. This is what I want to see. This move, it was higher during the bubble of the real estate market, but you can see that we created a multiple test high similar to what we just did in 2021, 2022, near 1,000 home sales, but we created multiple week highs and multiple week lows. We created lower highs and lower lows. And if we wanted to call the highs the lows, the highs the lows, just like we did now, that trend reversal started in 2005, confirmed in 2006, and really we could say the very last of 2006, 2007. And if you want to just say, nope, let's just go from February 2007, that is the true breakout and the continuation with lower highs, lower lows. If that's our true breakout, that's our acceleration in end of 2006, 2007, what were home builders doing back then? And what did the SPX do in response? And then we can find that base back here again to find out when they reverse. This is a strong indication. This is where consumers get their wealth, is in the equity in their home. And so as we're watching this and we see their confidence in their purchases of homes. So from 2006, they stopped buying. And whatever held it up there was likely investors, like we're seeing now. In fact, if you went back and looked at the data back then, that was big buyers. The big buyers were consumers, were already done, and it was the big investors that were continuing to prop that up, at least for a little bit longer. So let's go back to 2006. Let's take a look at that data. Now, this is no guarantee that we're going to have a similar situation, but we already see that the same price patterns, the same expectations, the same number of sales is going on in conjunction with what we just saw in new home sales. Well, here is May of June 2006. Here is the end of 2006, and here's the beginning of 2007. So just the same time we were confirming the downtrend, we were creating a lower high on home builders. Lower highs on home builders picked up here. If you wanted to wait, you can see that we finally broke through that same low, but this became lower highs and lower lows on home builders end of 2006, 2007. And if you really wanted to wait for the breakout, you'd say about July of 2007 was when the true breakout happened in home builders. What happened during the same time here on the SPX? Let me zoom into the same time period here. And the equity market was able to maintain higher highs, higher lows a little bit longer. So could home builders be a predictive tool? If we are seeing home builders break through support, could we be seeing early indication that the SPX is going to top out? And you can see, when did the SPX create its double top? Right through here. Let's take a look at the exact time frame. We created the double top in the market October of 2007. We broke through and confirmed that breakout towards the end of the year. Let's call it December of 2007. And that was it. That was it. We were over. In fact, if you were to put a trend line across there or a price level across there, this double top and this break of support on the SPX became the peak of the market, and we never returned above that. We tried in 2008. We never returned above that all the way through 2012, and you can see that it took all the way out 4.5 years to do that. Now, if we're seeing the similar situation, the similar setup, the similar move in the markets here, and let me get to the similar chart There we go. If we're looking at the same move here, then that breakout was the end of the home builders, and it took some time to have it reflect in consumers' purchase behavior. If home builders are falling, home prices are falling. If home prices are falling, the equity, the ability to refinance your home and pay off your debt and meet your obligations goes down, 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 down. And you can see that the lows almost perfectly coincided together. In fact, if I put my cursor on there for the weekly low, the SPX low hit on the week of March 2nd of 2009, and the low here was a week early, nope, same week, March 2nd, 2009. It's just not zoomed in the same way. Now, as you can see through here, home builders made higher highs, higher lows, and held all the way through here. We don't have to have it going up, we just have to have it not going down. Once again, looking at the current price action, or the current new home sales data, if we go over to our current time, I would say that confirmation would be a move below 600,000. Really, the 500,000 would be the best benchmark, because then we are breaking through. We're eliminating all the sales, the average sales going all the way back to 2016. That will be a significant breakout. So watch for a break below 500,000 in monthly new home sales. If that monthly new home sales clears 500,000, I believe we're headed to 300,000. I believe the home prices are going to have to be liquidated from the inventory that the home builders have, and that means average prices and equity in the homes is going to drop dramatically. And if we go one more time back to the SPX versus the home builders, that should coincide with the break of this short-term support right about $65. If it breaks through $65, I expect us to drop down to 60 and probably finish out the year and drop all the way back down to 50. So if we're talking about a 17-point move, that's a 33% drop in U.S. home builders, new home builders. There will obviously be opportunities to look into the individual ones, Toll Brothers, D.R. Horton, Pulte Homes, Lennar, and others. As they are near their peaks, they will give opportunities to possibly trade back down to these lows where we could be seeing 30 to 40%. They're all about 30% to retest the 6-month low or the yearly low. And so I think the fact that they're lining up that way does tell us that that's going to be the case. Remember that they have inventory that they have to use, they have to get rid of. And so if we're looking at that inventory and they're going to start flooding the markets to get out of these positions, especially when we're continuing to raise rates, and it's going to make it harder for them to sell the homes because the payments are going to be higher, then I do think we are probably facing a top in home builders. And if it breaks through the support and confirms a downtrend, now we're looking at a downtrend that could be followed by a downtrend in equities over the next quarter. That's my plan. That's what I'm looking for. That's my expectation. And I'm just going to let that new home sales number help guide that, as well as price in the underlying individual equities and in the ITB as the top indicator of the break of support. Well, that's going to do it for me today. Watch out for tomorrow. Tomorrow is going to see manufacturing data, and the manufacturing data should provide us some additional ideas and clues as far as how hot the economy is running with these rising rates. If we continue to raise those into the next May meeting and manufacturing is maintaining, then we will probably see another rate hike in May. It does look like we're going to probably see a little bit of slowdown in manufacturing and maybe not in durable goods. So we're still spending money is what it comes down to. But again, the break point, about $65 on the ITB, and a break below 500,000 new home sales on the monthly report from new home sales. Thanks for watching. We'll talk to you again next week.